Mario Draghi, just pick up a point that you made. You said you made a political point when you talked about a kind of central authority, and I just wonder, to pursue that with you, do you think that there is a political appetite for national sovereignty to be ceded over budgetary matters to some kind of central authority in the Eurozone?
Yeah, I think so. Appetite is too good a word, but I think there's a sense that things have changed dramatically. And the moment of recognition was the last summit. And the very fact that now countries in the euro area are willing to have a one financial and banking supervisor for all of them is a meaningful concession to this idea of sharing sovereignty. Rather than using released sovereignty, I would rather use the word sharing sovereignty, because you see, in a globalized world, and I think you in the UK know better than anybody else, the national sovereignty is in fact very limited. What you can actually do and decide at national level is not much. So, on the other hand, if you are part of a big euro area, then you have some power, although you have to share your power with other members.
So it means you will have, in effect, a kind of EU-wide deposit insurance scheme whereby you have banks in the stronger Northern Europe underwriting basically the banks in the weaker South?
Yeah, that will take time. First, we have to have the supervision in place. The plan will foresee exactly what you said, a deposit insurance guarantee and a resolution fund. We will have in the order, that's my guess, of course, it depends and my guess is informed by what is easier to be done in the short term. So first, we're going to have a supervisory system. Second, we may have a resolution fund financed by the industry in the initial stages. And third, we're going to have a deposit insurance guarantee. By the way, on the deposit insurance guarantee, let me tell you that the bad thing would be if we didn't have any. But in fact, we have them, but they are national. And many of them are fully funded. So from a stability viewpoint, there isn't a shortage of deposit insurance guarantee funds. But we want to make sure that we break the link between sovereigns and the banking system.
Okay, well, that's a point that Mervyn King, briefly to you, that you raised when you said at the outset that globally, if banks fail, it mustn't fall to the taxpayer, basically. But can you really decouple a banking problem from a public finance problem when we know that the state and the banking sector are so inextricably linked? I mean, you know, banks buy government debt and governments guarantee the liabilities of banks, and they kind of live off each other. But in a global way, because obviously UK is out of the Eurozone, how would you see what you desire to be implemented? What kind of global authority or global regulatory system could you have?
I think we've got more than enough in terms of authorities and bodies, and actually what we need is to just put in place the measures that are necessary. And the creation of banks that were too big to fail, and the resulting policies of governments, decisions by governments to bail out creditors, which in the case of Ireland has proved devastating to the Irish economy and to the liabilities of their taxpayers. So I think everyone understands the need to avoid getting into that situation in the future. I don't think you need to create new bodies to do that. You actually have to make sure that you don't allow the banks to get to the point where governments feel they have to rush in and bail out the balance sheets.
Do you think internationally there is enough of a regulatory system there? Because you've got the Volcker rule in the United States, you've got the Vickers report here.
And we will implement the Vickers proposals, and it's very important that we do. Each country can make its own judgment about the form in which that wishes to be done. But I'm very struck that events of the last few weeks have changed opinion amongst many who are sceptical about moving in this direction to become enthusiastic advocates of going even further than the Vickers proposals themselves. So why don't we start with Vickers and put that in place, and then we can come back and see if we need to go further.
Shifting sands. Can I ask for Q's and A's from the floor? And if you do identify yourself, and wait until one of the ushers gets you with the microphone. And also, you may have seen that on your seats there are question cards. So if you're too shy to put a question yourself, I can read it for you. Ushers, just give the microphones to the hands that go up. Please do. Don't wait for me to give it to you. So if we give it to this gentleman here. Sport for choice, you've got two of you. And that one to that gentleman there. Peripheral vision, yeah. If you stand in position for that gentleman at the back, please. Microphone, Usher. Yeah.
I'm Mark Walport from the Wellcome Trust. I was struck by the metaphor of the bumblebee. And I don't think it's a very good metaphor, because the bumblebee evolved to fly through millions of years of natural selection. And frankly, if the bumblebee had been designed by a committee of economists, or indeed a committee of biologists, it would never have flown. So my question to you is really whether central bankers, and I'm thinking particularly in Europe, are going to be able to overcome the natural selection of the markets.
Right. Put the microphone closer to your mouth.
Sorry, my question is whether the central bankers are going to be able to overcome the natural selection from the markets in Europe.
Okay, I'll take a collection. Can I have a second one? Who's got the microphone? Just stand, introduce yourself.
Thank you. My name is Shahmar Mofsumov. I'm director of the Sovereign Wealth Fund from Azerbaijan. And 40% of our 30 billion fund is invested in euro. And the question to Mr. Draghi is, what is the probability that in 2 years there will be less Eurozone member states than today? Thank you.
Thank you.
Those are both you. Do you want to pick that one up first and then go to the natural selection of the bumblebee question? Yes.
Yeah, no, I just want to answer to that.
And then that one, yeah.
Okay. The markets are basically, I think the markets are acknowledging less strength than it really is in the bumblebee, are acknowledging less progress that's been achieved until now, but they are giving us messages. And we react to these messages, and if you ask me, it's a power question. Will we be able? Shall we be able? The answer is yes, of course. Our means are... the problem is that we want to do it, the problem. The important thing is that we want to do it within our mandate. That is what makes the thing, which is both effective and right. We don't want to supplement actions that have to be taken by governments. We don't and cannot supplement actions that have to be taken by at the European level. We can encourage them, we are certainly close to them, but we don't, it's not our job. And I've said this on and on and on. Our job is to maintain price stability in the medium term. Our job is to cope with financial fragmentation when it falls within our mandate. And I have no doubt whatsoever that we will overcome the natural selection of the markets, but we'll also come out of this different. We'll graduate it into a B because of the market selection.
Thank you.
Thank you.
They fly backwards sometimes, they do, don't they? Anyway, the question briefly, if you would, about Azerbaijan and the Sovereign Wealth Fund. Oh, you have rousing answer.
I'm sorry, I don't venture into speculations about things like changes in the treaty. The treaty was meant to have the number of countries that we see today. And so, frankly, I can't really estimate the probability of that. However, it shouldn't affect your investments in euro anyway.
Okay, thanks.
Thank you.
And I can see Bill Rhodes, former Citibank, and a man who has dealt very closely in negotiations to do with sovereign national debt during the 90s in Mexico, Brazil, and so many other countries. Bill, please, your point.
Thank you very much, Zainab. Mine is for you, Mario. You described...
You ask questions to Alexandre.
Yeah. I was just...
And Agustín too.
You know what, Mr. Draghi, I was about to come to your assistance and say, please.
Or Mervyn.
Have three others. Yes.
You knew this was going to you, Mario, anyway. You described very correctly the drying up of the interbank market in the Eurozone, very correctly the fragmentation, or as I call it, balkanization in lending. And you talked about a single regulator banking union. The problem is that, and you mentioned that some sort of announcement may come out in September, but one of the real frustrations of the markets is we have these EU summits, Eurozone summits, financial ministers summits, and they say they're going to do this and that, and they rarely, if ever, meet the target. And I think this one is so important as you described. And so when will this happen, actually happen? And will it be the ECB? Will the ECB be the single regulator? Will it be the European Banking Authority? I think this needs to be cleared up like immediately. And you have to meet the timetable this time because the markets are very skeptical.
Thank you.
Thank you.
Thank you, Bill, for your point. As somebody who works in the media covering all these summits, I must say you do look like you have more than the Himalayas, actually, at the moment when it comes to summits, but there we go. Do you want to respond to that very briefly?
Yeah.
Briefly, if you would.
Well, it's on one hand, I don't want to prejudge what the Commission proposal will actually say, but the summit conclusions make explicit reference to the ECB being the one supervisor. So this is the answer, and it's going to be fast. And I think everybody wants to make it fast, but well done, of course, well designed. So people who are working in the summer for this, and both in the Commission, in the ECB, and I think at national supervisors as well, because we'll have to work with them on this. We shouldn't forget that in the end, knowledge, skills, tradition, history lies at national level. So the important thing is to have a central authority which can really question any decision that's being taken at banking level all over the euro area, and have proper informations, visibility, inquiries, and all this. And I think we are on a good road. We are on a good journey to that objective.
Thank you.
So, next.
All right, just time for 3 more, and they don't have to be questions. They can also be comments. So briefly, if you would. There's one there, and one there, and I'll just take them collectively. They can be comments. Go. Yep. Oh, Lena, from the Governor of the Central Bank of Botswana.
Thank you very much. Again, my name is Lena. Governor Draghi, it's your question, I'm sorry. But I was interested in the event in September, the one supervisor regime. I just want to know the extent of the coverage. Is it going to include the entire financial sector, retail banks, insurance companies, investment banks, and their intermediaries? Thank you.
Just very quickly on that one, if you would.
Well, the answer is now essentially geared to banks. So small, large banks, cross-border groups, but hasn't yet formulated for insurance companies or non-bank sector, like the shadow banking sector.
Okay, yeah.
Thank you.
James Quincy, Coca-Cola. In the spirit of trying to help you out, Mario, I'll ask a question to someone else. Alexandre, in Brazil, in the past, there's been talk of currency wars. Any comments on how that's evolving and whether you see it getting better or worse?
That was a comment about the finance minister at the time, Manto.
I think it's fair to say that today Brazil is, because what we did in the last 9 months or so in terms of easing policy and putting together sort of a different policy mix with tight fiscal and having the space to adjust our policy instrument and keeping inflation under control. As a matter of fact, keeping inflation a convergence path towards our target. I think today it's fair to say, and also what Brazilian health has done in the last 6 months or so, I think I would say that Brazil today is more prepared to deal with the spillovers of monetary policy elsewhere, okay? In comparison to where we were, say, in the beginning of 2011, when we had very intense capital inflows, large volumes. We still have pretty decent FDI. Well, as a matter of fact, we are the largest recipient in Latin America with $64 billion in FDI. This continues to be very strong. It's covering our current account deficit. But as far as answering your question, I think today the Brazilian policy setting is better prepared to endure spillovers from elsewhere.
Yes, gentleman here.
Vittorio Colau, Vodafone, British company, but 40% of the business in the Eurozone. So the question is not for Mario, but for Mervyn King or any of the other two, but I hope you will help Mario with your answer. Mario has talked about fiscal union, banking union, financial union, economic union, and sharing sovereignty as the way forward. Question for all of you. Are you convinced by what Mario Draghi said, or based on your experience? This is a competence-based question. Or is it time to help him and the other Europeans to talk shamelessly, loud and clear about political union as the real only thing that will convince the markets?
All right, okay. And if we have that as our final question, and if you could incorporate your closing statement and pick out anything else that you may wish to. I'll start and finish that way. Agustín, Carstens, please.
I think that we have seen the right movements during the last 2 years. They have been accelerated. I think that political will is being shown in all this process. And I think that, at least from my point of view, what should be done is the implementation has to be accelerated. And I also think, and this is I would say a humble recommendation, there should be more coordination in terms of communication, and there should be, I would say, a single voice in presenting issues to the market. I think the communication and the tactics on how to deal with the stabilization process is very important. We learned that in Mexico, when we had our crisis, it was difficult for Mexico by itself to have our own government speak with one voice, with one single message. I think it's far more difficult to do it with 17 countries, but I think that the gaining confidence and the gain of, in terms of impact of the measures they have implemented would be much more bigger if there is a single voice, a coordinated message. I completely agree with Mario that a lot have been done and Europe is a much better place. And I think that part of the problem of credibility probably has to do with the way things are communicated and followed up.
Thank you very much, Mr. Carstens. Very briefly, if you would, Mario Draghi, the inevitability of political union.
Closing statement is, well, I was also, while I was speaking, I was asking myself, is the market skepticism or your skepticism for this, is it warranted, or by what could be justified? Since I testified about the progress I gave you, I told you lots of positive things. Well, the reason why, the reason could be that for 10 years, either countries at national level, many countries at national level, haven't done anything. And a European level either. It was basically now we woke up nationally and supranationally, and as often happens in the history of Europe, things are going much, much faster than anybody could actually guess, could have guessed before. Thank you.
Alexandre Tombini from Brazil.
Yes, well, like Agustín, I think we have learned from our crisis that you had to apply overwhelming force in terms of adjustment and financing to restore confidence, and you have to have sort of a narrative, a single voice to be able to communicate where you're heading towards, to help in the confidence building phase. I think the first issue, which is responding with overwhelming force and in a swift way, because the longer it takes, the higher the cost. I think we have gone far in terms of increasing the cost of this global event at this point. But I do agree that a lot of progress has been made. The issue of bank funding has been addressed in late 2011, early this year. The issue of recapitalization of the financial system has also brought about some important measure in this respect. And the issue now, again, is how to implement those building blocks to restore confidence. But my view, again, I think the area after a few period ahead, I don't know how long it will take, but certainly we emerging markets will have to prepare to intense competition in a few years down the road.
Thank you. And we end this session where we began. Sir Mervyn, your closing statement and incorporate that last question.
We're in the middle of a global crisis, not just a European crisis. If you were to judge from the British newspapers, you might think it was all caused by the bad behaviour of a small number, or for that matter, a large number of bankers. That's false. Of course, there was bad behaviour, but this was a crisis which emanated from major mistakes in macroeconomic policy around the world, and fundamentally the inability successfully to coordinate macroeconomic policy so that globally we wouldn't get the imbalances, the capital flows that created difficulties for the banking system and so on. And we saw this going into the crisis. We kept meeting at the IMF, but we, all the countries, big countries at the IMF, did nothing to solve it collectively. And I don't think this was a problem that could have been solved individually. And coming out of it, we're not going to solve it individually either. It will require a more collective response. That is not the same as political union. On that point, I worry that it's very easy for people to use those phrases. Indeed, some of our American colleagues take the view it's easy to solve the European crisis. It's like being the old joke about the economist on the desert island where the only food is in a can, and the question is how you get it out. And the economist just says, easy, assume we have a can opener, and you get it out. And too many people just say, assume Europe is one country, then the problems are over. But we're not one country, we are separate countries. That's true globally too. And the big challenge, and the really difficult and important one, is how to work out, and this is the challenge for Christine, how to work out how the major economies in the world don't pretend that they're all one country and therefore the problem has gone away, but actually find a way of working together in order that their macroeconomic policies are sufficiently well coordinated that we can get together out of the global crisis.
Thank you very much. Well, speaking of cans, I think you opened a can of worms with your question. Thank you very much indeed, gentlemen. Thank you very much indeed. Time for our next session. Thank you. Probably easier to go down that way or this way. Yeah. Thank you. Thank you.
Good to see you.
Thank you.